All right, good morning, everyone. Welcome to the Trade Finds Adjustments for Thursday, the 19th of September. For those that attended my Tuesday class, you're going to see that this looks really familiar. And I'm going to run along Tuesday's thought process with you today. On Tuesday, if you're going to place a trade, there are three very important things to consider. Have any of those things changed? If you were to take a look at that, have any of those changed? Number one has changed. How do you mean number one has changed? How do you mean number one has changed? Duh, right? Of course, number one has changed. Number one has changed because we've already had our rate. We've already had our rate hike. So we could say change it to reaction. And let me ask you, what has the reaction been from the FOMC rate cut? What has the reaction been? No one's typing everything in. So let me go ahead and make a comment. The reaction has been up, down, and volatile. Really, you got to think about up. Up is where it's moved the most, and up is where we're ending up. But it was up, down, down, up. Really wild day on yesterday, and we're continuing to see it up today. But the question is, will it hold? Will it hold? Will we see the bump that we're expecting? The run up that we're expecting? So that's where we're at right now. We're all over the place. We still have triple witching on Friday. Hey, what does that mean? Options expiration for futures, options expiration for options. We have the quarterlies that come through. There's a lot that's happening by way of options expiration. So this particular options expiration, you should expect to see some big wild swings on Friday. Now, the neat thing is most of those will probably be made up again on Monday. But you're going to have a very volatile day on Friday, the last couple hours of the market expires, most likely. I'm not trying to predict the future. I'm just telling you what typically happens on those options expiration on triple or quadruple witching. And then last but not least, we still have the Middle East, but it seems to have gone down. Just keep in mind, as soon as you become complacent, something gets you, right? As soon as you become complacent, something gets you. So, not much has changed in placing a trade. For my opinion, these still will be justified through the end of the week. Which brings us to placing a trade on Under Armour. Let's take a look at where Under Armour is today. If I pull up a chart, Under Armour is going to be down, I'm sure. But let's set up a chart. Let's pull up a chart on Under Armour. And I think this will somewhat justify why I made the comments on Tuesday that I did. Why it was important to me to place the trade the way I did. So for those of you that were there, I was looking for enough credit to protect us down to where? Where was I looking for enough credit to protect us down to? Anyone remember? I was looking for enough credit for us to protect us down to, there you go, $20. Why did I choose $20? Did I randomly just say, hey, let's just pick $20 because it's a round number? Why did I choose $20? Gotta wait for all my screenshots to catch up here. There we go. Why did I choose $20? Come on, guys. I don't just want to tell you how to do everything. I want you to be able to think and figure this out for yourself. Why did I choose $20? There was specific reasons for it. That's for my computer crash, still not running right. All right, so there we go. Thank you, Lance. Plain and simple, past support. But in all honesty, it's 3 days there. It's a midday there. I'm trying to play this area right here. This area that it seems to hold at a round number. What did I tell you? If we break the 20, we break that $20 range, what should you do? If it breaks the $20 mark and looks to close below, I would add a $20 long put to play these guys through earnings. Right there. So as a comment, on a day like today, I am not worried about the position. In fact, if I had the opportunity, I would be, if you have not placed this trade yet, this would be another one to get into. Now, if you already have the stock and so forth, then obviously no, this is not where you jump into the position. This is not, this trade that I suggested on Tuesday would not be for you. It would be for, you know, a new person that was looking at entering a trade. But what an awesome position to be in. Well, Kevin, define awesome. Awesome today is not my portfolio. Awesome today would not be my portfolio. I get it. I get pissed off when the S&P is up 0.4 and I'm actually down in my personal portfolio. That's why I look at the performance and I see what the difference is. In a smaller portfolio, I might be a little overweight at Disney, Baidu, Bank of America. They're killing or offsetting Facebook and Visa. Not one of the better days for me. But if I was looking at an Under Armour position, what we paid 20 October 11th. So what we paid 20.84 is down 51 cents. And our credit at 21 is down 24. Last was 74, so 80, between 35 and 40. We've made up somewhere between 35 to 40 cents. We're down roughly 10 to 15 cents on the position. For me, that would justify, and I like this one even better, getting in to the same position at 21 now gives you a cost basis below the $20 mark. The original trade, you're down somewhere between maybe 10 to 16, 17 cents. If you're going to now wait a day or two and jump into it now, the position looks roughly 8 cents better. Now we're down to below $20, which means you wouldn't have to add a long put position on until you got to the $19.92 mark. What we're trying to do is to get into Under Armour a little bit cheaper before we run it through an earnings. Why would you want to run it through an earnings, Kevin? Because it ran up to earnings at $27.50, $28 last time. So it's maybe you can say, and I hate using this word, it is a progressive trade. It's a trade that we're going to progress along to get it to work the way that we want it to, and to play it for the earnings down the road. Now, we have a second trade that we brought up yesterday on Costco. And what happened to Costco since then? Did they get an upgrade? Did the Bernstein analysts get an upgrade? What do you think? Do you think you got an upgrade today? Does Costco an upgrade? No, of course not. He didn't. In fact, if anything, They it was really pretty awful. In fact, I wonder if I have it. Give me a quick second. This guy is all I'm going to say. Analysts downgraded Costco. And the funny thing is, if you follow him a little bit, he's really not that good at all. Out of 5,500, he ranks below it. He's not really. He's awful. He's not one of the better ones. So we got a downgrade on Costco. What's even worse is if you call into a broker, there are times they're going to misunderstand what you're saying. But before I attack a broker, looking at the chart, you know what, let's put the new chart in. Let's get this one out. Let's go get a new chart. I guess the question I'm going to ask you is the Costco trade in trouble? It's not particularly high volume. We are down $5. Really like to see it come back to only be down about 4 at the end of the day. But is the Costco trade in trouble? Trick question, what do you think? If you think the Costco trade's in trouble, tell me why. Is the Costco trade in trouble? Kevin, it's in trouble because it got downgraded. Okay. But the trade isn't just for today. The trade we put on is all the way out to October 4th. Well, we would have paid $594 October 4th, $285 October 4th, $275. So it's between $3.40. You're down 40 cents right now. Between 40 and 50 cents on a $5.95 trade. So you're down 10%. Is it necessarily in trouble? Well, we probably can't answer that question yet because we haven't seen where it's going to bounce or move to. You might tell me, well, you have technical crossovers to the bearish side, which is true. But we don't particularly on 2.6 million that's trading. We don't have particularly high volume on this downgrade. I guess here's what I'm going to say. It might sell off on light to average volume, but we still have our 200-day or our 50-day holding a support at 281.93. Our 50-day at 281.93 is still holding support for our 82.50. And it looks like we got a bounce today pretty close to 285, it looks like. So if we remember, the comment was put 5 contracts on and save some money to dollar cost average. I would definitely be dollar cost averaging maybe at the end of today if we see it actually bounce higher. If it's down $4.50 or less, I would be initiating this trade. If it doesn't, you can wait till tomorrow and you can adjust your figures. This trade would look better right now at a 280. This would be perfect. A 280, 275. And I'd look to get in somewhere around the 370 range. This would look extremely appealing to me. In a smaller account, I'd have to do less. I might even go ahead and I might see if I can't get a really ridiculously good price on it. And it might be one that if we break the 50-day tomorrow, or the moment we broke the 50-day, I might take it off. But if I was airing this a little bit later, at 280, 275 looks very appealing. And I can be trying to get a ridiculously cheap price on it for a bounce off of the 50-day simple moving average. The point I'm trying to bring across today, one day does not make or break your trades. One day if things move a little bit against you is not a reason to panic. And just because the trades don't look great right now, I'm willing to admit that, it does not mean your trades are broken. Once again, it means that you have to have a little bit of patience. And that little bit of patience is extremely important. For that reason, I'm going to say it one more time. Patience can get you a long way in your trading. Any comments anyone would like to ask me? Or any questions about what we talked about Tuesday, what we're talking about today? Anything? There we go. We've got 2 questions that came in. There's always a tomorrow in trading, as long as you don't lose all your money today, right? Kevin, sometimes patience is hard to do. What have you done to learn to be more patient? Easy. Marriage, kids, sports, golfing. All those bring you patience. In all honesty, Lance, the best thing I can tell you in regards to learning patience is experience. And I gained a huge amount of my experience investing by doing it paper trading. To paper trade it and place things wrong while writing them down And while I was writing them down, it was really easy for me to learn them or have them all in my head better. It'd be the best way to say it. So paper trading, not real trading to learn by losing, because I think that's foolish and stupid. But trading in a paper account where obviously I could remember, because I was writing them down by hand, I could remember the mistakes I had done, and it just stuck with me. But experience does play a fact in learning the patience. And I don't know if there's one simple way just to gain patience. You heard me talk about marriage and kids and sports or golf. I think to play golf, you got to have an extreme amount of patience. It's one of the most stupid, aggravating sports in the world, and I love playing it. Another comment was made here. School of Hard Knocks. I think that's an expensive way to sometimes learn, but without a doubt, the School of Hard Knocks definitely teaches you the woulda, shoulda, couldas of trading. It's part of what you do. All right, guys. Hey, have a wonderful week. Don't forget, we'll have a monthly options expiration on this Friday. With that said, I look forward to talking to you next Monday. And guys, good luck in your trading. Talk to you later. Bye-bye.